Naeem, I think, is now with us. Naeem, asking you about the FTSE 100, a good 2 days there. News out of Germany, though. Volkswagen losing market share there. Lots of trouble still to come from there. Give us the context for the European markets as a whole.
Thanks very much for having me again. Yes, we do have another buck up in the bullish trend for the market, and that's just on the back of this optimism that we have in the market that the Fed will not increase the interest rates. Let me just recap the two important points that I do wanted to emphasize today. Last week on Friday, we had a huge rally in crude oil, and one of your colleague, she said, okay, so will that will last, or is that the kind of a rally would you be able to, or you would be buying into it? And I said to her, I am not completely convinced whether the fundamentals or the physical situation has changed. The situation that we have is pretty much speculation, and then that's what putting the price of a crude higher. Now, for this week, we are down on crude as compared to the last week, but the equity market is a lot more higher, and then we have recovered the losses that we have seen in this week. Now, the reason behind them is, again, the Federal Reserve Committee. We had a number of economic data throughout this week, such as core CPI and the retail. Now, the retail was absolutely disaster, completely rotten, and it stinks. But what we were more concerned about when it comes to the economic data, either in Europe or within the US, was the CPI data, because central banks are really swimming in a sea of deflation. We have a thorn of deflations around us, and that's what pretty much the concern for central banks. At the same time, it's very important that we clear the noise when we are talking about inflation or deflation. If we rewind back our story a few months perhaps, what Federal Reserve they were really concerned about was the employment and certain elements of inflation, but they were pretty much comfortable raising the interest rates coming into September. The reason they didn't do it, because the conditions which were out of their control, and we are talking about not internal, but external conditions such as China. Now, moving on to the next week, we have a mother of all data coming on Monday, which is the Chinese GDP. Somehow the sentiment has moved on two different prospects now. We have a Chinese GDP data coming on Monday, which is going to move the market and bring an enormous amount of volatility. And then towards the end of this European market and towards the end of this closing bell on the US market as well, we will see enormous amount of a shifting, because traders will position themselves for this Chinese GDP data. But we also have...
Naeem, if I could chip in there as you go, just talking about the interest rates before we lose that. I saw a report today that the Bank of England, I think one of the deputy governors at the Bank of England, saying that interest rates will rise sooner rather than later. What does that mean? Firstly, what is sooner rather than later? How soon is sooner? And how does that fit into your comments about US interest rates?
Yes, exactly. I mean, one important thing to remember, Bank of England is completely independent of the decision. So if we are comparing what's going to happen within with the Fed in the America, or whether they will follow them, then we have done enormous amount of study into this. The correlation doesn't really exist that much, or it's not that strong. So Bank of England, whatever they will do, they will depend and they will react to their own internal domestic data. Now, the employment has been extremely good, but again, we are swimming in a sea of deflation. For that, we need to see more stability in the wage growth, and secondly, we need to see more stability on the oil prices. In terms of oil prices, we do know it's only 2 months before Iran comes back online. Now, we are talking about 500 to 700,000 a barrel per day. They are expecting this for 1 year.
Surely then that's factored into the price. The market must have taken account of that, Naeem?
Yes. So with respect to that, what you have, if the market does, if Iran does produces 500 to 700,000 only, okay, that's pretty much priced into the market. But if they fell short of expectations, or if they exceed the expectations, that's where the difference is going to come. What is going to happen, or what is already happening right now, is the countries which owe enormous amount of money to Iran, such as India, they are already paying them back for the funds that they owe in terms of oil. India has paid 1.4 billion. Another 5 billion outstanding. Soon the sanctions will go. These funds were going to start coming in. The production cost in Iran is a lot more lower as compared to its other competitors. So deflation is pretty much an equation of how you price in crude, and that will pretty much be a gain on a central bank's agenda.
Thanks to Naeem Aslam, Chief Market Analyst at Ava Trade, talking to us there from London.